we're gonna just go through the, what happened this week. So Wednesday we have September producer price index, and the headline number was 0.5%, which is higher than the 0.3% month over month, and 2.2% year-over jump reflect recent upswing in crude oil prices. However, if you strip out food and energy, it came in less than expected. So it was 0.2% month over month and 2.2% year over year. So this seems to dovetail nicely with recent comments by a number of leading bankers inside the Federal Reserve that its 18 months of monetary tightening is wrinkling out excessive inflation from the U.S. economy. So there's one chart here I just want to show quickly. 1 second here. So here you can probably, let me blow it up a little bit here. Yeah, okay. So right here, this middle one. So you can see like the main CPI, kind of, it kind of went up a little bit, like they said, 0.5%. You can barely see in the chart. But the core CPI has been coming down, and so the trend is still good, right? Because that excludes food and energy, which is more volatile, and so as long as energy prices doesn't go up too much and food doesn't go up too much, then and everything else start to fall, then the core CPI kind of reflects that. So they're on the right track, right? So things are going the way that the Fed expected, and so I think that's a good sign, like for the overall, whatever basically what they were trying to control, right? So the inflation side. So then, because obviously we know inflation hurt long-term growth, and so as this coming down, then the growth prospects should get better, right? Because companies can deal with pricing easier, and so but we still, anyhow, sorry, this is the CPI. Sorry, I'm showing you, they're almost the same. So let me jump to the CPI, which is the next day. So yeah, the rose 0.4% above. So it went up slightly, the main CPI. And then the CPI now is at 3.7%. Exclude food and energy prices rose 0.3%, which is same as forecast. And yeah, so the core inflation year over year is now 4.1%. So it's still above 4, but it's starting to head towards the 3 number. But it's just, I think, people want it to come down faster, right? But it hasn't. So that's probably the biggest problem. Now that day, the Nasdaq, I think most of the index reversed. So that was like kind of the start of the pullback after the 4-day rally, 3.5-day rally. And then volume rose that day. So that was it gives its first distribution day from IBD's perspective. And then on Friday, there's no note here, but the consumer sentiment came in also much lower than expected. So again, right now the market is kind of reacting a lot to consumer, anything related to consumer, because their economy is so much dependent on consumer. Anyhow, it came in lower than expected, the sentiment, and so the indexes really didn't have a chance Friday. It just basically from the beginning, from the first few minutes to the end of the day, it just really didn't have a chance. So that is the biggest challenge still, right, in terms of the macro. And the other thing that I also noticed is that, like, again, we'll see in a second when we start looking at stock, is a lot of growth stocks got hit hard. Like, not all of them, but enough that you feel like, oh, something changed, right? So that's something we'll look at. So anyhow, that's one thing. So yeah, so we're gonna we'll look at a chart in a second. Nasdaq basically got rejected at 50-day moving average. So that's not a very good sign. So that's something we want to look at. And also, from the day it followed through, like about last Friday, right? It followed through. It closed on Friday below that that day's price. So generally, that is also another negative signal. So now, like even though there's only one distribution day, IBD already changed their outlook to under pressure. So which is unusual, but just because of just how severe Friday, I think the pullback was. And like I said, we see lots of leaders got hit. Not all of them, but enough that it raises a concern, I think. So we are under pressure right now. So now we're going to jump back to the index and take a look at the chart. So on a weekly basis, so this is daily. Yeah. So if we go back to weekly, it broke that. At first we all thought, oh, this is going to be a continuation of the last 2 weeks, but because of Friday, it basically closed down, and it also closed below the 50-day. And so here you can see it's kind of subtle, but it dropped below. Like here's the Thursday morning peak, and then it reversed, and then Friday it basically not only cut through the 50-day, but it went all the way just very slightly below 10 to 21 day. So this is critical point now. I think if the market makes a move down, that will be quite challenging for growth investors, because we don't know how far it will go, right? Whether it goes back to this previous low, whether it goes back to this 200-day low. But the reason why 50-day is so important is that's where institutions tend to support the market, right? And so when we fell here and then we fell here, you see it went a lot further, right? So this one, it got tested twice. Here, this is the first one, and the other thing that's very crucial right now is that here the 50-day was still going up. Here the 50-day is going down now. So that's why the market has less patience now, right? Before, the market has more patience, and even then it still went down. But now it's already the 50-day is going down again, signifying that in the medium term, like not like not the next few days, but like in general, right? The last month is saying that basically there's more sellers than buyers, right? And that's why this 50-day is starting to go down, because otherwise, if this pulled through this week and kept going instead of coming back on Thursday and Friday, then the bulls have taken over, right? But it's not the case. So the bears has again in control here. So that's very dangerous, and so again, like I said, this is a critical point for me. Like 10-day is like the minimum level it should uphold, and so if we fell 10-day, that's when things can go more south, right? And it's gonna be more volatile, and it already is volatile. Like I said, the last couple of days. Well, actually, this whole week has been very volatile. It just swing back and forth. But the first few days of the week, it did close strong, and then Thursday and Friday, it just kind of did the opposite. It closed weak, right? So again, bears are in control right now, so it's going to be a little bit more challenging, right? Because of knowing this. So that's why I think like there's a high chance, we might be stuck in a range bound, right? So this is the range here, and then now we have this range. See, this is higher, lower high, lower low, and now we have a lower high again. And so like I said, is it gonna make a lower low and come to 200-day? I don't know. Obviously, there's gotta be some major news that will make this happen, and we just don't know what that is, right? If that's gonna happen, so we just have to be very cautious and again manage risk, because it's just not a green light per se. We have this follow through day right here, and like I said, it undercut that like very, very slightly. So if I draw the line right here, it's right there. It undercut this follow through day close. Not the rally is not over. Usually it will be over once it undercut that low of that follow through day. So it still have a couple percent here. 2.5%, 2.5%, something like that. So again, this is a huge support level because there's a lots of days that are stuck in this range. So but like I said, like for me, I'm anticipating Monday that it bounce. If it doesn't bounce, especially by by end of day, I would say this is has a high chance of failing this rally. So because usually Monday is this kind of like a new week. Everyone is hopeful, especially the bulls. And if they don't see anything change, they'll probably end up selling more by the end of the day. So that's something to be aware of. So anyhow, this is Nasdaq. Just compare the equal weight. Let's see how that looks like. You can see equal weight already are much further down, like below the 10-day. Again, that's another weak sign. It just couldn't hold the short-term moving average. That's not good, right? So again, it already found support once, and that's another thing, right? Because it has tested this support multiple times. If it comes back to it, there's a high chance of failing now, right? Because if it's already tested this, why is it coming back to it, right? So something fundamental is changing underlying, like whether more institutions, maybe they just realize, hey, we better get out, right? While we have the chance still, right? So that's something to pay attention to. So I think in some ways the equal weight is more important than the heavyweight stuff. This one S&P looks a lot better. Like same thing, I guess. It's holding 10-day. It tested 200-day. Let me go to RSP, the equal weight. Yeah, so equal weight is also below the 10-day. So very similar to the Nasdaq equal weight. So very similar. Of course, this chart looks more horrible. You see, it's still on the downtrend, right? On the like this is still on the downtrend. So that's actually quite scary. It's probably more obvious on the weekly chart. There you go. So that's really not good at all. It just hasn't been able to climb above this downtrend. Okay, so go to Dow Jones. Dow Jones was the only one who kind of flatlined on Friday, which is kind of interesting because I thought there was going to be more negative, but it was down 0.2%. Okay, so yeah, not as much as other index. And this one is still like I mean it's slightly above the 10-day, not much, like very slight. So yeah, so it's, and then we have Russell. So let's see, because Russell has a good run. I think it was a 4.5-day run. 1, 2, 3, 4, 5. Okay, yeah, 5.5-day run. And then Wednesday start to give back. So it give back even slightly earlier than the other index. And then Thursday it just got swamped. And then Friday it got swamped. So now we like all the way near the lows in just 2 days, right? After 5 days of run, and it give back all its gains in 3 days. That's insane. And again, this is on a very sharp downtrend. Like this is probably the worst index of all, and it just like the slope is crazy. So like this again, this is showing a lot of problem. It keep wanting to come back down, and again, we still have this long downtrend, and we tested this level like 1700, near 1700 level many times now in this whole year. So if it breaks this, oh man, I think we're gonna have huge trouble. Like again, we're very close to it, right? So again, this is a long-term trend right here. And then this year is up here slightly, like so. I mean it's not like this is last year's low, and this two are this year's low. So, but when you look at the numbers, it's not that far away, right? This is like around 1650, and then this is around 1700. It's only, yeah. So it's not like, super far away and say, oh, it's gonna take a while before it gets there. I mean, you could have a few bad days and boom, we'll hit this year's low, and then we could also hit last year's low. So this is very, very scary. Again, I don't know why this is happening, but overall, this is why the breadth is so weak, right? So Any questions on that so far?
No.
So we jump to just the index chart here. Give me a second. Let's go to it. Should be there very soon. There we go. Okay. Let me just make it small again. Okay. So again, we look at the advanced decline line. So you can see S&P actually look pretty good, right? Like you have this from the bottom up, and it already surpassed 2 weeks ago, and then it came down, but it still look healthy here, like this chart. And this is S&P 500, and also accumulation distribution has improved to D plus, which is from E. And then we look at Nasdaq. Nasdaq is still at E, and you can see why is that happening. Look at this. The advanced decline line hit new low on Friday. So again, the market breadth is just not there. You have 2,100 stocks down and 1,200 stocks up on Friday. Like that's double, right? So it's just the market breadth is not there even during this recent rally. So it went up a little bit, but again, it wasn't like S&P where it passed the previous peak here. So this is still very bad. Like a lot of tech stocks are just not doing well. Like you have a handful of tech stocks that are doing okay, but a lot of them are just continuing to go down. And then you have Dow Jones. There's no advanced decline line for Dow Jones, but it also improved slightly to D. So I think there's some stocks that are holding up, and then there's and then there's more stocks in the tech area that is like kind of just not doing. And then obviously this one doesn't show Russell, and like I said, Russell is just smaller cap stocks are even having more trouble. So those are the big things that's happening. Okay, so we're gonna jump to the dollar. And this week, like at the beginning of the week, you can see from last week starting, pretty much near when the market start to rally. Like I think it was last Friday, right? Around here probably. It started to rally 4 days, and then you see how big the jump was on Thursday. Like that's insane. So it's like it pulled back to 21 day, and now we are it only took like 2-3 days, not even 2 days. And we're only near the high, right? So again, the dollar is so strong. This is continued to be, bad things for a lot of stocks, right? And that's what they're saying. This earnings season, you will see a lot of companies, especially like, companies that deal with, on the global side, will have more trouble, because of this, right? So that's going to be something, going to happen. And then we look at the 10-year yield. So 10-year yield looks a lot better in terms of like it has dropped. And even Friday, it just didn't bounce much, right? So I think the 10-year yield looked like more like a topping signal. Like, you have 2 strong days and then it just couldn't hold those highs. So that's usually a good signal that it has topped. So this one looks more promising than the dollar, but usually the dollar and this goes hand in hand. So this is continue to be watched. It's under 10-day moving average now for like 3 out of the last 4 sessions. So that's also another good sign. So this might have topped. So if this have topped, then probably some of the growth stocks tech stocks especially will probably continue to do better. Okay, so that's that. And then we have sorry, I was looking at the wrong one, right? USO, yeah. So that's the oil price. So the oil price, same thing like the dollar. Again, I think definitely the dollar and the oil price has more correlation than the yield. You have this strong pullback, and it looks like this was almost, again, it got rejected here the first time, but the second time it was able to pass through. So that was yesterday. And then basically now the rally is on again. for oil. And so oil stocks are probably performing a lot better than any other areas right now. And there's also volume support too on those days. So that's really good sign for oil stocks. Again, this is the inflation worry, right? This is like, the market doesn't want this to go up too much, and so yeah. So we'll have to continue to watch this, because if this starts to balloon again, then the inflation story just will never go away.
Yeah.
So, all right, we're gonna look at. So we already look at the index accumulation. Let's look at the sectors area. Let me jump to my screen here. So this is the IBD trend here. So we did, like I said, we went to uptrend last Friday. And by Thursday, we have our first distribution day, which was the big down day on Thursday. And then Friday, even worse, more on the index. And IBD changed it to under pressure just because of how fast it dropped on Friday, and coming from Thursday, because it was a reversal. And then in terms of the industry groups, you can see it was up, and same thing, the number of stocks were up, and then distribution started happening on Thursday and Friday. In terms of each sector, you can see technology was doing well, industrials, commodities, financials, and then by the end of the week, only commodities are green, right? So yeah, so every other area seems to be continue to sell off. So if these trends continue, that would be really bad for this market uptrend. So that's why under pressure is probably because it's so early in the rally. It's never a good sign when you start a new rally and the market just give up so easily, and that's what happened on Thursday and Friday. So that's why this warrant a call for under pressure, and obviously if there's any more bigger drop, it'll probably go back into correction. So that's why IBD did that, and usually they will do that if it undercut that follow through day. So which is, like I said, about 2% or so for Nasdaq. So that's that. What we want to do right now is look for stocks that are making new highs. That's probably the number one trade, especially in this environment that's so tough. Because it is a very volatile environment, and if a stock keep making new highs, those are the stocks that just don't really care about what the general market is doing. And then the other ones that are weaker, instead of you want to see them pull back quietly, right? You don't want to see like huge spike down and then volume shot up, things like that. Those are more worrisome signs. So those are the two things I would focus on in trying to figure out, let's say the market gets weaker in the next week. You want to do risk management. Well, you have to cut some of them. Well, who do you cut? You cut the ones that doesn't satisfy this criteria, right? So that's probably what you want to do in terms of risk management. And then and if the market turns around better, these stocks are probably going to fly, because they're the ones who've been holding up better than others, right? So yeah. So the other there's 3 person that I listened this week that I feel mentioned something interesting. So let me just put the notes here. I forgot one of them. But anyhow, Eric Johnston, he's been a bear quite a while now for most of this year. And he thinks that, so he thinks that short term there'll probably be, possible rally. So going towards the end of the year. But he thinks the long-term picture is not good at all. One of the reasons is treasury supply is too high, and that will continue to, put more pressure on the yields and stuff. And then, again, he has the same. He thinks that the inflation, even at 3%, is still very high. So he thinks that will continue to cause problems for the economy. And then the oil price is another big issue. He thinks that the oil price, is going to also dampen a lot of, companies' profit margin and stuff. And then finally, he mentioned consumer savings. As yesterday all the banks reported, right? And that was one of the common theme among all the banks, was that consumer savings are declining. Again, basically they're just tap out, and they're not saving as much as they used to. In fact, they're spending like more than they should. That's why the savings is going down. So he's a definitely a long bear. Brian Belsky, he is more bullish. One of the reasons why, like he mentioned lots of things, but the one thing he keep talking about is that the yield at 4 to 5%, he believes that's very normal, and he believes the market, the economy can not survive, not only survive, but can do well at this normalization. And so that's his storyline. He continues to push that. As I think last week we talked about Ed Yardini. He's more along this line too. He thinks that the normalization, which is right now the way it is, it's not a bad thing. It's actually a good thing because the business will adapt, and in the longer term they'll continue to grow. So Cameron Dawson, she also mentioned lots of things. She's kind of like a semi-bull, not super bullish, but she's like not bearish at all. She thinks that one thing to look at is consumer staples versus discretionary. And why is this important? Because normally when you have a recession, consumer staples tend to do better. But right now, they're not, right? Like they're doing almost the same as discretionary. So so from that perspective, that's why it's not like too important. This is XLC, the consumer staples, and the discretionary down here, and you can see like, yeah, I mean discretionary has come down. Like obviously you can see staples went up here, come down. I mean, but the thing is that what she's trying to say is that it hasn't been like this hasn't gone up too much, right? But although it is coming back up though, so we'll see. That's interesting. But you can see discretionary much weaker, right? But what she was trying to say is just hasn't seen anything uncorrelated. They seem to be moving in sync most of the time. Although here, like I said, here it has a subtle difference. Just because it right here it came down more, right? But other than that, so far the correlation are very similar. What she's talking about is that we should see something like consumer staples going up and then the discretion going down, like something like that. When you see that trend happening, that means the recession are pretty much either here or very near, right? So the market is not anticipating that, right? So that's why she believed that there's no near-term recession at all. And if it does come, she, like I said, last week she mentioned already, it'll be maybe closer to the second half or something like that. So that's that, and we can jump to. Okay, so if we look at Atlanta Fed GDP estimate for this third quarter, 5.1%. So this is, again, we talked about this a couple times now, and even the banks yesterday, they did like surprisingly pretty good. And so again, I think this high GDP number is going to impact this quarter quite a bit, and so I think there'll be lots of good surprises, but we'll see. So that's that, and then the fear grid index still quite fearful. Let's look at the timeline here. So it did bounce back. Okay, I guess it's still, we have extreme fear here, and then now it's bouncing back a little bit. Okay, so then we have investment survey here. So this is as of Wednesday, right? That was before Thursday and Friday's drop, and so it came back up to 40%. So that's quite a big jump. So that's still, this people starting bullish again. But I think the other thing was the put call ratio. Let me find. Oops. So here we can see composite index at the top. Short-term overbought, oversold oscillator slightly below. So that means it's oversold. 10-day moving average up and down volume. You can see the down volume coming back up. and at the bottom, top 10-day moving average. So this thing was, the lows is so high compared to the to the new highs. So you see way more stocks are hitting new lows, right? This is another bad sign. Jim Ropel always talk about this, and that's why he knows we're not in a super bull market. It should be the reverse when we're in a super bull market. So this is still not happening yet. So the wicks shot up a little, quite a bit on Friday. I don't know if they say they hit new high, but it doesn't look like it. But yeah, it did shot up quite a bit. So it came close to the previous high here recently. So there's lots of fear for sure. Next week we're gonna have retail sales. This is pretty much just like Friday, right? Consumer sentiment. I don't know. If it keeps going down, I think the market will react to it. It seems like it has been reacting to this more recently. Beige book report comes out on Thursday, Wednesday, right? Wednesday, yeah. So that one important because that will kind of talk about, probably, the economic conditions and stuff. So that might move the market. And then the Fed will also participate on Thursday at noon at the Economic Club in New York. So that's that. And then we have big earnings coming out this coming week. Tesla, Netflix, Intuitive Surgical. Those are the bigger guys. So, yeah. You can jump and look at some of the, tech stuff to start with, like SMH. This is again very bearish signal right here. Like it came up on Thursday in the morning again. Like I said, I was like, wow, this market is strong because the semiconductors was able to pull through this downtrend. But then it reversed by the end of the day, and it still closed up. And then Friday it just gave up. So it's still holding the 10-day. Again, that's why I keep saying this is the critical level now, right? If it gives up the 10-day, we'll probably be on the downtrend again, and that will be bad. Again, we might be range bound, like we can be stuck in here for a while. That is a high possibility actually. Just because the market just don't know what to do, right? It's just gonna stuck in this range until it knows what, whether it should be more bullish or should be more bearish. Does that make sense?
Yeah.
IGV, the software side, I think it's weaker. Let me just see if that chart pulls up. Okay. It was strong right here because it was come to the new high. Like this W shape is much more, W, whereas the other one's more slanted down, because that was in a downtrend. This one looks, decent in terms when you look at the overall chart. So even though Thursday, Friday dropped, it doesn't look as bad. So this one, again, it's at the 10-day, but this chart looks a lot better. Let's jump to some of the tech stuff. So let's look at Microsoft. I think Microsoft, it hasn't run up as much as some of the guys, but the chart looks pretty decent. But it is at the bottom range, right? So this is the base, and it is at the bottom range. So that's the only bad part. But other than that, it is holding above 10-day. So that's still better than the index, right? So that's that one. Google, definitely Google is the leader in this uptrend so far. Again, it's pulling back orderly, nothing crazy. So, again, when we look at the chart, right, we look at this guy. This guy have like 10, 12 days of going up, and then now it just come back 2 days. And go back to Microsoft. Similar, it has one big drop day here, but overall it's like 10, 12 days now. It pulled back slightly, right? So this is really good sign for the big cap techs. Meta dropped quite a bit, but still it's because it's relatively stronger, and so again it drops to the 10-day line. So it seems like the 10-day is where all these guys are holding out right now. So we'll see if it, see if it can hold. Let's look at Nvidia. Again, same thing. You can see this uptrend nicely, and then it pulls back to 10 days. So this pull back to 10 day is definitely severe, right? Like, it's much bigger than, like, I mean, it's not like overall it doesn't look bad, but the 1 day looks, 3%, right? Anyhow, so but overall, if you look at the bigger picture, it and this is one thing I want to talk about this week, is any stock you feel like, let's say, is weakening, it's probably better to not look at the daily chart. It's better to look at the weekly chart, just because day to day there's lots of swing, but week to week it's much better picture, right? So right here, Friday it came down, but it still looked like an uptrend, so so this looks good to me, it still looks like an uptrend. Giving back 1 week is not too bad. RS line, like most of this RS line will be near new high. That's there's no doubt about that. So I wouldn't even use that as an excuse to hold it. But if it was coming down, then definitely, yeah, those are the weaker ones. But yeah. So if you're not like, that's one thing I look at some stocks this week, like, and we'll go through some of the ones that fall more. Is where's the trend line, and also like so this would be the trend line. So that's why I said this 10 days kind of like, for most stocks, the 10 day will be like the trend, where the trend line goes, right? So if it goes below that trend line here, that usually will break the 10 day, and that will be when it might start a new downtrend. So Apple, yeah, Apple looks not bad. Similar slope, similar trend. Pull back to the 10 day. And what else we missed? Amazon. So Amazon, it looks slightly weaker. Yeah, it did find also rejection at the 50 day here, but it's too soon to tell, So, but this is probably not the strongest one for sure out of this big cap. Did I miss one of them? Let's see. Tesla. Okay. So Tesla is a very interesting stock. Right? This is a very nice cup with handle pattern. And also, the other thing that, like, if you follow Mark Mini, like he looks at the contraction pattern, right? Like, so you have this big range, and then it contract, and if you can contract here more, and then bounce out, this will be very bullish, So that's the kind of like, and then especially on, like, if it's on the selling side, like the volume has, and it did, you can see here the 4 days of red is much lower than the days of blue, right? So this is also very healthy. So this is again, but it has to come out though, right? So even though the volatility has contracted, but we need it to come out and not break this pattern. So then it can be bullish. So I think that's probably something to pay attention to. But a lot of traders are saying how this stock has so much bad news in the last few months, but yet the stock is able to hold at this level, shows a lot of good signs. So that's one way to look at it. But the other way to look at it, from one of the Market Smith guy, he was saying how Scott, he mentioned that he was looking at a lot of the accumulation by institution, and they didn't pick up any shares this last quarter. So that's also not so good, because but I don't know. So yeah. So you can see a lot of blue volume here, lots of blue volume here, but here is more subtle, right? Except this one day here, I don't know what happened that day. So the blue volume is not like high, you see, right? So there's no, like, there's not much selling either, but there's also not much buying, right? So it has, so there's no like institutions not jumping in at these prices right now. That's I guess that's what he's trying to say. So anyhow, so that's Tesla. So last week I was like around 33 or 32 stocks on my list, but it has grown significantly because the first few days of this week it just really run, right? A lot of stocks really run. You can see now, like, I'm at 58 plus, yeah, like 54, yeah, minus 3 rows, yeah. So around 53, 54 stocks on my list, and so it's starting to become harder to manage in terms of, like I try to keep it around 30 core positions. And so I have to do a lot of maneuvering, and juggling the positions. Up here, this is the, I haven't finished yet, but this is this week, the ones that are closing really, like, at least stronger than I would think. So let's go through this list. LPG, oil and gas stock. This one is, probably the best one, like in terms of, like, doing well this week. There's other stocks that I don't follow, like front lines and one. We can look at the chart quickly. But this one, you can see it just broke off of this cup and handle, hit new highs, relative strength, hit new highs, and then now you can see it's just holding so tight, like, it just doesn't want to pull back, right, for any reason. Even the day when the oil price was dropping, can't remember which day, but it just didn't want to give up. So this is really strong. It's not a big cap stock, but but it is holding so strong. The other one that most people follow is TDW. It's still holding pretty good. It has give back. You can see the RS line drop quite a bit, and then it come back like much slower. So that's usually not something I like. So this is not on my list. So yeah, so that's that one. Let's see if there's. I just want to quickly browse through any. Try to keep the same theme as possible. Like LPG. Yeah, I think that was the only oil and gas stock on my list. Most of them are kind of fall hard and came back up a little bit now, but I don't know. I just feel like I don't want to play the oil as much. And then the RS line, because of that, RS line is not strong enough. So that's why most oil and gas stocks now are not on my list. And this is what I'm talking about. They just fall so hard, and now even though they came back up, it's much slower pace, and so that's why a lot of them are not on my list anymore. So that, even though, like I said, they're being accumulated this week, I don't know. They might move really fast. I don't know if it will. We'll see. But this is the unusual one. This one has climbed, just really strong. Yeah. So that's that one. Okay, so I noticed a lot of financial stocks this week are actually climbing pretty good. So like RELY, it did pull back here, but on Friday it actually closed pretty strong. So that's a really good one. And just how tight it's trading, just unbelievable. We go to a weekly chart. I mean, this stock is just really support 99 RS rating. Again, this week any stock that can hold up are probably the stronger ones, and this is one of them. Futu is the Chinese stock. So this one again is starting to come out now. Like it did break out this week, but it pulled back slightly. But still, like, this is showing strength. Really tight action. Friday was able to not, hold the 10-day and close in the middle of range, but overall it's healthy. So that's another good one. So there's a lot more. The ACGL. Like I said, there's more financial stocks came on my list now. This is another one that just broke out. And you can see the RS rating just keep hitting new highs. Looks really insurance group. This is insurance group. Yeah, this is a nice cup base with a slight handle here, and now it's hitting new high. And look at the RS rating. This is really strong. There's a few more, but we won't go through them. I'll just point them out. Airy, RS, C1, yeah. C1, maybe we'll look at that. R&R, PGR. So C1, I don't have this, but yeah, this is a investment solution for investment data aggregation. So this stock is not as well known. I don't see many people talking about it, but the chart looks pretty good. Friday it did, fall 10, 21 days. So last time it found support 21. So we'll see if we find support here. But yeah, so this is one of the stocks that just kind of like this bounces pretty strongly here. So financial stocks overall did better than I thought this week. That's yeah, nice here. Medical. I like this week. I think medicals are the yeah, like medicals are like not all of them. Like there's only a few have. So Lilly, MVO, and VRTX. Those three are like, the institution favorite right now. So it did reverse on Friday, but that's okay. So here we go. Like this is the chart. Yeah, look at this RS rating. Like it's just climbing and climbing. I mean, so and then MVO came out slower. So it just came out. I think it was Thursday, right? Well, yeah, Wednesday. But look at this volume. Look at this amount. Let me go back to LLY. I think the volume was huge too. Okay, that's not even as like this is nice, but not as like not as big as Novartis. Yeah, this is huge volume. That's amazing. And then VRTX also came out on the space, so really powerful. And this one just continued. Also same thing. It just continued to make new RS. See the blue dot shows up because it just broke out with new high RS. So yeah, so really strong those three. The one that ISRG, I like this for a long time because it always does have nice good run, but this time they're reporting in this week, right? But it just couldn't keep up this time. I don't know what's wrong with it. I tried a couple of times, it just didn't work. Like again here it undercut, right? So it just doesn't work this time anymore. So all right, so those are the health, and then tech. Man, tech is very diverse. Overall, I think most of them are healthy, but the one that I feel like the strongest are the security area. So like let's just look at them. PNNW, Palo Alto, make new high this week and also climb out of the space. RS rating just continue to shoot up. I mean, look at Friday's volume. No one wants to sell this stuff, right? CrowdStrike, another strong. A lot of analysts like CrowdStrike. Like it's insane how much this stock is being talked about on CNBC. Again, very orderly pullback. Look at this volume. No one wants to sell, right? Yeah, and just this RS rating is just so strong. Okta is another one. This one probably doesn't look as good the chart, but it's on an uptrend. Zscaler. Okay, let's look at Zscaler. Yeah, this one looks pretty good. So Zscaler, again, pull back orderly. Look at the volume dry up on Friday. That's like this is so clear, right? Very impressive. Very impressive. So there's a couple more, but they all look good. All the security stocks. Okay, anyhow, NTNX. So this is one of the few enterprise software that are really showing strength. So look at this, new RS here, new RS here, and then now you can see it just climbed. Look at Friday. It's still every day is making new high. This is incredible strength, incredible. Okay, so the next one, BMW. This one broke out this week. And I was actually like last week we were talking about this, how it just hold and hold and hold and hold, and look at this volume, 1 week volume that no one wants to sell, and it finally happened this week. I don't know if there was news or anything. I didn't follow it, but it broke out and RS rating just shot through the roof. It was a really big up day, and then Friday it gave back some, but that's understandable. So we'll see how this continues. That is really strong strength. So really exciting about this one. Let's see. Let's look at Palantir. Okay, let me jump to Palantir here. Okay. Palantir, last week, it came out and then of this little pullback here. This week it fall back nicely, orderly, right? To the 10-day. And look at the volume. Lowest in the last 5 days. Very strong strength. And RS rating 99. Okay, the next one is probably my most, it's not a big disappointment. But Friday it gave up more than I wanted to. Duolingo. I mean, it's at the 21-day now, it's slightly below it. So, like the last time it found support here on the 50-day, like 1-2 times. So I don't know if it'll go to 50-day. We'll see. But like I say, this was a little bit of disappointment to me, and also the RS rating is lower now. So I might trim some of this just because it's starting to look a little bit weaker than I want it to be. It's not as orderly pullback. So yeah, but we'll see how it start out next week. So that one a little bit disappointing. Let's see what else. MongoDB, yeah. Let's look at MongoDB. So this one found resistance at 50-day, but it comes back to 10-day. It looks normal to me. Volume dry up, so those are not bad. Adobe, I still like Adobe a lot. Yeah, I mean this is orderly pullback, like not high volume, higher volume on the up days. So that's a good sign. And then we have what else? ANET. Okay. ANET. It fell on Wednesday. Yeah, that was the day I was like, kind of like Duolingo on Friday, right? But it bounced back pretty quick. Like it closed at the top of the range, and then Thursday it shot up, and then Friday it gave back some. So, it's still holding on. So nothing unusual here. So, it hasn't broke out yet. So we're still waiting for this breakout. So, we'll see when that happens. And let's look at some of the design software, because they're really strong. Like this is a very strong uptrend right here. And then Friday gave back a little bit again on lower volume. Very good sign. CDNS is another one. Again, really strong uptrend right here, and then it just gave back a little bit. Okay, a little bit more volume on Friday, but yeah, it's still holding near the breakout. So both these stocks are really strong right now. They both broke out and have a chance to be a strong leader. So let's see if there's any other tech stocks that we haven't talked about. Yeah, there's some of this. ESTC probably gave back more than one. PSN really strong. It's coming up this list now. It wasn't even on my list last week. So let's just take a quick look at that one. ESTC. I mean, it's not strong. It's just stuck in this range right now. But again, we have this uptrend really strong, and then so it's holding on. It's not giving up yet. PSN, yeah, this one came up a lot this week. Look at Friday. Wow, it even closed at the top of the range. So that's a really good sign. NTES is the Chinese gaming stock. Give back some Thursday, Friday. Volume starting to dwindle down, and so that's a good sign for support. And there's also, yeah, So that's most of the tech stocks. Anything you want to look at? So JP Morgan, it has a positive reaction, right? And the only problem, it closed at the bottom, right? And volume is super high. The RS rating, because it closed at the bottom, the RS rating didn't make new high, right? So that's, we'll see how it trades, right? But sometimes it happens. It's okay because the uptrend is still intact. But the one thing that has changed is the fundamentals. It's now, like, if you look at this quarter, they announced they blew it by 20%. But the next quarter, they're going negative, right? So that's something that it won't be on my list for that reason. So it has dropped from like 24% to 1% next quarter. So that's barely any earnings growth, and so there's a lot more risk. I don't know how all the banks reacted. Like Citigroup reported, yeah, they all reversed. This one reversed big time. BlackRock, okay, this one's holding up, but it still fell, right? But yeah, I can't remember all the other ones that reported, but it just it was not bad, but it's just, like I said, they all have better earnings, but then like I think the forecast going forward is more weaker, right? So I don't know. So it's kind of, with all this consumer stuff, I feel like market will take the negative side more going forward. So yeah, I'm not sure. So like that's why we haven't looked at the regional banks in a long time, but you can see they're just going nowhere. Like this downtrend is still in place, and then if you look at the big banks, KBE, the same thing. The big banks are still on the downtrend. So I'm much less bullish on banks for sure. Like they're not on my list. But all the other areas of financial, like I said, those few ones that I mentioned seems to be doing okay. But yeah. Any other ones you want to look at?
No, I think pretty much covered. I just checked the list.
All right. So we'll talk about retail last. LNW is a newer name on my list, and this is in the gaming service. I think I don't know if they're in casino, but anyhow, this one, has a strong some accumulation here as it went up, and then here as it goes down. One thing I noticed is the volume, right? It has come down quite a bit. It dry up, right? And then boom, it took this one day. Look at how much it jumped yesterday, 5%. So again, retail stocks, like even discretionary ones, I would be very cautious. But because this is a newer name, like look at the earnings, right? It's growing like triple digit right now. So it could be a star. That's what I'm trying to say, right? If there's a rally started, So if the market is in good condition, I can see this stock take off. This is not a new IPO or anything, but like I said, it has done not bad this whole year. Like it's not a superstar, but it's also not a dud, right? So I don't know. It just keep coming on my screen lately, and like I say, earnings growth are growing strong. So that's something. That's why it's on my list, right? So look at this next quarter, 226%. You compare that to another stock that a lot of people talk about, like Spear. I don't know if you heard about Spear. A lot of people talk about this one, and I mean, they're starting to turn around, but this next quarter is still negative. I mean, they could. I don't know. We'll see. They're still not making much money. That's the problem, but everyone's talking about it. So I mean, if their revenue can grow, and even if they don't make money, I think the stock will continue to grow. Like this stock has performed pretty decent this year. It's very volatile, right? Because small cap. But this week, I don't know what happened. It came back down hard. So this is the problem, right? Like I find that stocks with negative earnings are more volatile, right? Because for this reason. Just, and it's also like small cap, so obviously they can be easily volatile. But it did, but like I said, compared to LNW, like the chart is almost the opposite. This is going down, this is going up, right? So, and like I said, like it's like the relative strength is outperforming itself. It's almost already near high. Yeah, very strong. Yeah. So, okay. I think we didn't talk about these few stocks here. I got hammered on these stocks. You probably don't own them, but I own them. And let's just go look at them. Like these are the electrical industrial stocks that some people own them, like me. And they've been a star this whole year, right? And all of a sudden this Friday, I don't really know what happened. It's just a big drop. Like this guy dropped 6%. I don't like right now. It still look normal, but when you look at the whole, many months of like accumulation, we have never seen a day that swings 6%, right? So this is one of them. MOD is another one. This one is in a slightly different area, building heating products, but these are all stars. Look at this. It's running. And then all of a sudden you have this 1 day swing, 9% swing. Like you never seen that before, right? So this is like these are all 99 RS rating. So just because it has up, like I don't know if this is the end of it, right? So I probably will be, some I already sold and some I only sold half. I might get rid of this stock. So just and then the other one, there's one more, I think. Powell, STR. Yeah, STR was probably, the strongest one of all because of this run right here. It accelerate, and you see, this is crazy. Like it dropped under this low. I saw in the morning, so I got a little bit lucky. So, but I saw it, and then like 5 minutes later, I'm like, oh, it's down even more. I was like, wow, yeah. Like I mean, it closed not bad, like in the middle of the day range. So maybe it's bottom. I don't know. But I wasn't sure, right? How far would this go? So, but yeah, this was my biggest position out of the 3 stocks. So I got hit. But we'll see. Like these are superstars. So in there, they're all 3 of them are in different areas, but they're all related to like electrical building and stuff like that. So I'm gonna watch that. The other one is Powell. This one I have a very tiny position. I was gonna build it up because it was going up, right? It was ready to break out, you see, but then it pulled back on Thursday and Friday. And now, see, this is the problem. They're all making low RS now. So it's unlikely that I will add to it. It's more likely I'll either get out, right? Unless something changed drastically, but I highly doubt it. Like that's the problem. When you have a sharp drop, just like the oil, it's very hard for it to have a V-shaped recovery on the RS rating. Like it's got to bounce pretty strong. So generally, when the RS rating do that, I tend to think that the strength is already, most of it is gone, and the people, I mean, sometimes it will bounce back. Like once in a while, you're in the blue moon, you will see some that will bounce back. But again, we'll have to watch this closely now. Yeah, so I think, most of the stocks, like EDU, like no one talks about EDU. Maybe once or twice I heard someone talk about it. This is still a nice moving trade. Hey, look at this. Look at this volume chart. Look at Friday. Oh my God. Look at this. Nobody want to sell.
This Chinese one?
Yeah, this is Chinese education stock. So I mean, they're probably monopolized, man, in China. I don't know if they're monopolized, but they're one of the biggest for sure. 102 billion. Look at that. Like, yeah, they just continue to grow, and so yes. So this is one of my core position. Is doing really well. So yeah. So let me see if there's any name I missed. Most of them I already talked about. Like most of the tech stocks. See, most of this are tech stocks, right? And most of them are holding. I'm really happy so far, even with this week. Like, don't get me wrong, I gave back a lot of gains, okay, this week. But because at the beginning I make a lot the first 3 days, and then the Thursday, Friday I give back most of it actually. So it's unfortunate. Anyhow, we'll see how next week go.